Hey guys, this is Simon with Trading Perform Coaching. Want to take a moment and go over what a open drive higher looks like, and a open drive higher with trend day up, and then open drive higher that fails. And the reason why is because open drives tend to cause traders a lot of pain in both the spiders and in the ES trading. And so this video is going to take a brief, hopefully sub 10-minute look at open drives higher and how you can identify them in real time. What are the characteristics, right? The reason it's important is because for day traders in particular, huge amount of losses tend to occur right at the open when you're either trying to grab it long, grab it short, and you get your support resistance areas run over, right? I'm going to use an example of how people take that trading information and extrapolate that information into a trade that can cause them to lose money, right? So first, let's start off with what is an open drive higher. And for that, we will go to a chart without any pictures on it, right, or any support resistance zones. So the characteristics of an open drive higher, number one, of a gap open drive higher, are obviously there's a gap there. Usually that gap is substantial, meaning more than 5 points is the first characteristic of where there's a potential for an open drive higher. Secondly, the NYSE tick, and I'll plug that in here and insert it. The NYSE tick, as you'll see, will tend to open very strong and stay positive when we have that open drive higher, and it's going to hold. It'll tend to stay positive, meaning above zero, the entire morning. Let's go ahead and throw a line in underneath this just so people can see it easily. Here we go. And here is our zero reading. Okay, and as you can see, we stayed positive and have stayed predominantly positive all day long. Next is that so for textbook, generally what we're looking for is 3 bars to print up. Now it doesn't always have to be that way, right? But we're looking for an open drive. The low of the first 5-minute bar is the low for the day. It tends to not get penetrated. It can, just when it's textbook, it tends not to get penetrated. And there's little to no counter rotation. Additionally, we measure to see if we are able to get a half gap from the prior day's close, right? And as you can see, we made no attempt at the half gap and no attempt at the gap fill. That is the sign of a very, very strong market. Now, obviously, you would go and say, well, why would I short that? Why would I not go long, or why would I step in front of that? Well, the answer to that is relatively easy. Remember, if you're in the mindset of a day trader, what you are looking at on a day in, day out basis is if we look just a little bit further back, right? Because what you're trying to do as a day trader is make a determination as to whether the market's going higher or lower. So we can look here and we see that we gapped up here and pretty much right out of the gate, and this is reminder, right? This is Monday, Friday, Thursday. We gapped up and then immediately drove lower the other way. Now imagine the guy who gets this gap up and buys here and says, well, I knew it was going higher, right? What was his edge over here when he said, oh, I know it's going lower? And the answer to that question is, it is very, very difficult, and I know of no discernible way to look at these opens and to say either way that the market is going to reverse lower out of the gate or run higher out of the gate. What my primary objective is when I see the market open down like this or drive up like this, it's easier when you're going to get a gap to sidestep it, and it's a substantial gap, right? But even if you don't get a substantial gap, the number one easiest way to avoid getting run over, which is the objective of this, I do not know, I'll tell you right now, I do not know how to catch open drive highers and open drive lowers without guessing, meaning how do I get it right every time? And the answer is it's almost impossible, right? So the point being here is that we obviously, and let's get rid of this, so we obviously we do not know, but if we take the first 15 minutes and stand aside the first 15 minutes to 30 minutes, it gives us time to observe, right? And once we observe, we can push our trading out. You can trade it out. And generally speaking, as a rule of thumb, if you push out past the first hour, you tend to avoid the majority of the carnage that can just bone crush you, right? Number one objective, I don't want to get hurt in an open drive higher, right? And if we look, you say, well, that's two examples. Well, let me give you some other examples. Here's an example of an open drive higher, right? We gapped, open drive higher. Here's another example of where we got an open drive lower, right? And you can see the price action kind of went into balance here and pushed out later into the day. Here's an example of a gap and an open drive lower. And so what you want to ask yourself, and I want to reiterate what's important. If you can figure out that we're going to open drive lower or open drive higher out of the gate, you're a genius. You should be making billions and billions of dollars, right? But the reality is that the majority of day traders, when they're trying to capture these moves, right, is that they're getting run over one way or the other. And if they get it right, and remember, it doesn't matter if you get it right and make 10 points on one day, is if on the other 3 times you lose 5 points every other time. That means you've been run over each and every time you've tried to take that shot, and you got it right one time. If you're only winning 20 or 30% of the time, it's highly doubtful that the majority of traders are covering the loss over a period of time, right? But if you'll look carefully, on days where you get open drive lower or open drive higher, if you just do something very simple for the majority of traders, you skip the first half hour, right? And let's see if we can't get that to show up. If you just do something very simple by saying, I'm going to wait till after the first half hour, you get to see whether the open drive lower is going to follow through or whether we're going to end up with a balanced trade or a reversal without getting crushed. Look, all you do is you wait till right here. Look how much more manageable the price action is here versus here. This morning, even looking through here, you come over here, you wait the first half hour out. Look, by 9 a.m., the majority of the open drive is finished and you haven't got run over. Even if we come in and look again one more time over here, and we can see by 9 a.m. the majority of the strong push, meaning where you would get absolutely crushed, has finished, right? So then you can move on. Once you notice whether we have open drive higher or open drive lower, okay, then you'll know, and it looks the same for SPY, by the way. If you want to see this, let me add insert symbol SPY. Okay, that's the S&P ETF that mirrors. You cannot mix different symbols, delays. Interesting. Okay, I will have to get that fixed. I don't know why it is that way, but it should not be. Nonetheless, we'll fix that. Hold on a second here. I do not know why. The format symbol. So if we take a quick look, we get the exact same images and the exact same concept if you're trading the spiders, right? SPY 2110, right? If you look over here, you'll see let's see if I can pull this down here real quick, and I can't, so again, same issue right here. And I want to show you something here. See how this gap down right here? We're going to look at the spiders, but it's the same for the futures. If you look down at this spider right here, and you take your close, this is the exact same tool, right? Look at the open from Friday. Excuse me. Yeah, that's correct. Friday. And let's adjust this just a little bit. You see that we had the potential starting up of an open drive lower. So I want to go through this process again, because the key to trading is not only knowing the process, but triggering it over and over and over again quickly, right? So here's the deal. We gap down. We have, okay, so we have half gap fill, but no gap fill. Immediately, you know, sellers in overall control, buyers relatively weak, right? Flip that over here using the spiders, exact same trade, right? Gap up, no attempt at half gap. Now this is we go from on Thursday where buyers are relatively weak to buyers in absolute dominant control at this point, right? So it makes all the difference whether you're trading the futures or you're trading the spiders to be able to identify those days when if you're from a day trading perspective, if you're able to identify open drive higher, open drive lower, use the 50-60 retrace, right? Measure the counter rotations. Are we able to get enough of a counter rotation to actually get a scalp off, right? And then you can quickly determine are buyers in control or sellers in control. And just by shifting out to past that first half hour, 2 hour, right, to up to 1 hour, you avoid the majority of the carnage to the upside or to the downside the majority of days. And considering that day trading is all about surviving, right? Number one, the first thing we do is protect your capital. I feel that when the market's the most violent is not the best time to be trading. I want to enter when the opportunity and the violence is minimal and the market's about to make a big move one way or the other. And so my objective is to sidestep that first 30 minutes where it's extremely violent. I was able to do that today very successfully, did not get run over on the open, and it made all the difference to me being extremely flustered, agitated. And I want to take this to one more place. When you trade when the market's just opens and you have the least amount of information about what type of day type we are looking at off the open, psychologically you move yourself to a position of panic. You're having to react quickly, you're having to process quickly, and you get faster and faster and faster in your thought process. This is a very painful thing for most traders because they find that they can't slow their pace down once the market goes back to a normal rhythm later in the morning, and they're thinking too fast and they're reacting too fast to be able to make their trades work for them. So again, I think there's a lot of benefits to, first of all, just waiting out the first half hour. There's a huge benefit to being able to identify open drive higher and open drive lower. It lets you avoid getting run over, right? Identifying the day type quickly, right? And then finally, once you get past that open drive higher on most days and open drive lower, what you're going to find on most days, and let's go back to the futures here real quick. On most days, if this will pop up, there we go. Most days you're going to find after the first hour, if you take your big picture in, and let's look at this on a 15-minute basis really quick. You're going to find that past the first hour, you'll often get hooks back to the downside and hooks back to the upside. Hooks back to the downside, hooks back to the upside. And this is almost every day, whether we open drive higher or open drive lower, right? You tend to get hooks back to the upside. All you have to do is avoid that first hour or first 30 minutes to an hour where there's so much pain and fast pain, right? And you can get yourself set up to catch these turns. And what you'll also notice is there's very few days, there's a few of them pocked in there, right? But there's very few days where we just go in a straight line from point A to point B. Most days, we end up hooking back and forth, right? See that how we end up giving these U-turns here at the end of the day, or U-turns back down at the end of the day, anywhere from the middle, past the first hour, all the way up to the end of the day. You've got to give yourself a chance to survive so that you can catch these easier trades that take place through the balance of the day and not get run over. And you'll notice as we're scrolling back, look how few days actually turn out to be true trend day down or true trend day up, and we get true two-sided markets, right? So this is Simon. I hope that helped. How to identify an open drive higher or open drive lower is very critical for your success, and hopefully you find this informative and helpful. Have a great night, and we'll talk to you soon.